Rob, we're seeing a bit of a pullback today and really just following what happened on Wall Street last night and those weaker Asian markets this morning, but probably to be expected after the strong run we've had over the past week.
Yes, well, I think the States had a four-day rally up till yesterday, and I think a little bit of profit taking coming in across the board. And obviously it's just the consumer in the States, and we're going to have consumer confidence numbers coming out a little bit later in the States, and it's they're not quite back on their feet yet. So when these markets do have a good 3-4 day rally, people do come in and take profit.
So there is still a bit of caution in the market at this stage, isn't there, Rob?
Yes, there is. I mean, everybody is looking for the green shoots and the good news in the market and trying as hard as they can to ignore the bad economic data that comes out as the overseas markets start to come out of these recessions. But as they move up, people are still slightly cautious, and it is profit taking coming in. And I stress more profit taking than new selling coming in. So there's no short selling really coming into the markets at the moment that we can see.
Of course, we have chatted previously about how important the US consumer is to a global economic recovery. Are we expecting an improvement in consumer confidence out of the US this afternoon?
Well, Reuters says they're looking for about a 1.5% improvement on those confidence numbers to about 47.5. Obviously, we want that number all the way above 50. And they are expecting a slight improvement, but we'll just have to wait to see for those numbers.
So do you think if we saw a more positive number than that 47.5, that we could see some more steam behind the rally we've seen in recent days?
I think so. It's quite an important number for the consumers in the States. And I think that if it's a strong number and quite a bit ahead of what they were expecting, there will be a rally again back into the retail stocks and food stocks and the retailers obviously as well.
And really what we're seeing in the markets over the recent past is it'll take 2 steps forward, 1 step backwards again, but we're not really seeing this aggressive pullback that has been talked about. Do you think there's still a chance of that aggressive pullback?
Well, we've broken through the support levels a good few weeks ago and we're quite far above them. I think if we have a pullback, we'll come back to those support levels again and see if they hold. And we won't go straight through them straight away because we've had such a good break past them. They've really now a solid support level. And I think we can definitely come back to those support levels of about 950 on the S&P. But whether we break below that, it's the longer we stay above these levels, the better it is looking for the market.
Of course, locally, the focus this week is really going to be on the Consumer Price Index, which is being released tomorrow. And of course, we saw it coming down to 6.9% in June. Are you expecting another positive number for July?
I think so. The food pricing has come down a little bit and has been a little bit less sticky. Oil price is a problem, obviously, looking forward as well on the petrol price. We think it will be slightly lower than it was before, so a little bit less than 6.9%. And we need that definitely to see if we can get another interest rate cut by year end.
And of course, this will be the first CPI that also includes those electricity tariff hikes from Eskom. So that'll be an interesting one to watch, I'm sure. But also the food inflation, which you mentioned, because we saw food inflation coming down quite nicely for June. And I'm sure we want to see a continuation of that, don't we?
I think we will see a continuation. There are signs, however, in the Western markets that the food has stopped coming down and that is actually starting to pick up slightly. But I think on our side, with a very strong rand that we've had as well from imported food products, etc., we should still see some the price of food coming down slightly.
Of course, we had those results out from ShopRite this morning. What did they tell us about the food inflation outlook for South Africa?
Well, they're expecting the next 6 months to be very difficult and quite challenging. But their numbers are relatively good, more or less in line with what they said. The one positive thing was they grew their market share, which now pushes them up to 30% of that market, which is very positive for them.
And of course, do you think this is just because shoppers have been buying down, as we have talked about in the past, have been trending lower to shops like ShopRite?
Well, definitely. I think also one or two of the other food retailers do have credit food as well, if you take someone like Woolworths. And I think people are moving away from that and still into cash, so even affecting the food retailers. And I think people are moving down from Pick n Pay and Woolworths, and that's why that market share of ShopRite increased by 1.5%.
Of course, they reported a 31% rise in diluted headline earnings a share for the year, which was in line with what they said a couple of months ago, that they would have a 25 to 35% improvement. And yet we see their share under pressure this morning. Do you think the market was slightly disappointed with those earnings?
Well, I think they're defensive, and I think the market is very defensive stock, and they go into ShopRite to protect themselves. And I think there's not too much growth coming through from that statement saying that the next 6 months is going to be challenging. So I think maybe the market thought maybe there would be a bit of improvement into the 6 months, and therefore we see that share price coming down. But the overall market today is down as well.
Of course, another defensive stock reporting today was Country Birds. Revenue up 33%, but headline earnings up a massive 543%. What's the story behind that?
I just took a brief look at it before I got on air. But obviously they did a lot of acquisitions, and they did about 3 or 4 very big acquisitions, and I think a lot of that is coming from those numbers and mainly from acquisitions.
And also a much easier environment for Country Birds at the moment, I should imagine.
Well, they obviously come from a very difficult environment and from a very low base, but they seem to be consolidating quite well, and these acquisitions look like they're going to prove to be very good acquisitions. A lot of the companies they owned 30 or 40% of, and now have taken the rest of them. So they're also a producer of chickens, and they've got feedlots, etc. And they've made quite a few changes in how they produce those chickens, and it looks to be showing a very good value for them.
Well, some of the analysts we've spoken to say that retailers like ShopRite are looking quite fully priced at the moment. Do you think this is an opportunity to maybe switch from retailers like ShopRite into food producers like Country Bird?
There's a very good possibility. I think that ShopRite has taken a lot of the price inflation and put it into their own prices, and I think that the producers have been a little bit unlucky there, and they haven't really got the benefit of that. And I think producers now, if you can get them, are looking relatively good.